In the metals quadrant, the sell-off continues in the March copper futures contract. Copper is now down 6 of the last 7 sessions for a total move lower of 5.2%. On the low today, 3 spots 67.90. We were down 1.51%. On the high today, 3 spots 76.30. We were up 0.75%. That 1.51%, that 3 spots 67.90, the low today was the lowest level the industrial metal has seen since November 17th of last year. And as far as the week goes, copper's working on its second consecutive week lower and the worst week on a percentage basis, I should say, since September 5th of last year, having already fallen 3% this week. We're down 0.75% in toward the close today. China deflation is a worry now for the copper markets. China consumer prices plunged at the fastest rate in 15 years, and deflation fears are starting to deepen. China's consumer price index fell 0.8% month over month compared to a year earlier, and it marks the 4th consecutive month of declines, as well as the sharpest drop since September of 2009. This continued slowdown in the Chinese consumer activity certainly does not bode well for copper. And then you saw yields climb in the US as you go across the curve. The 2-year hit 4.45. That was up 4 basis points. 5-year 4.12. That was up 6 basis points. 10-year 4.16. That was up 7 basis points. And the 30-year 4.37. That was up 6 basis points. All of this strengthened the dollar, which of course, because of the inverse relationship with copper and the dollar, and honestly copper and yields, that put pressure to the downside on copper as well. The only positive on the yield side was a slight move to better levels for that 2s10s inversion, which could meet a stronger economy, but it only went from -32 to -29. So still a long way to go to normalize that yield curve. But all of this turned out to be a little bit bearish for copper today.